Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The Bank Promotion Exams 2025-2026 is your golden opportunity, and I'm here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success doesn't come to those who wait, it comes to those who prepare. So let's start today, prepare smartly, and make your promotion in 2025-2026 a reality. Welcome to part 5 of my Part to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear practical sample answers about case studies and group discussions to help you climb the career ladder faster. The subject today includes case studies from 41 to 49. Previous case studies links are available in the description. Case study 41. The catch 22 of a public sector bank. Scenario: the bank is facing a dual challenge: pressure from the government to increase lending to the priority sector, which has higher risk and lower margins, and simultaneous pressure from analysts to improve return on assets, ROA, and profitability. Challenge: propose a strategy to balance these conflicting objectives. Solution framework: tech-enabled efficiency. Use data analytics to identify low-risk segments within the priority sector. Example: MSMEs with a long transaction history, farmers with insurance. Cross-sell for profitability. Mandate the cross-selling of high-margin products like insurance, mutual funds to every priority sector borrower to improve overall wallet share and profitability. Partnerships. Partner with fintechs and NBFCs for last-mile credit delivery and risk assessment in the priority sector, sharing the risk and cost. Strategic communication. Clearly communicate to the government and analysts how the bank's deep priority sector reach provides a stable low-cost deposit base CASA, which is fundamental strength for long-term profitability. Case study 42. The core vendor dependency ring. Scenario: a single vendor provides the core software for the bank's treasury operations. The vendor has been acquired by a competitor, raising concerns about data security, future support costs, and strategic vulnerability. Challenge: develop a de risking strategy. Solution framework: audit and contract review. Immediately conduct a security audit and review the contract for clauses on change of ownership, data privacy, and domination. Short term mitigation: negotiate a strong service level agreement SLA and data access protocol with the new owners for the transition period. Long term strategy: option A, multi vendor. Begin a project to break down the monolithic software and adopt a best of breed multi vendor strategy. Option B, in house. Start building an in house team to develop critical modules, reducing future dependency. RFP process: initiate a request for proposal RFP process to identify and onboard a potential alternative vendor. Case study 43. The strategic shift to fee based income. Scenario: with net interest margins NIM under constant pressure, the board wants to increase the contribution of fee based income from 15% to 30% of total revenue in 3 years. Challenge: as the head of the retail banking division, create a roadmap to achieve this. Solution framework: wealth management push, transform relationship managers into financial advisors, launch a dedicated wealth vertical focusing on HNI clients for portfolio management, insurance, and investment products. Transaction banking: focus on cash management services, trade finance, and forex services for corporate and MSME clients. Digital ecosystem fees: monetize the bank's digital platform by charging fees for API access to third party fintechs. Example: for credit scoring, payments, and for premium digital features. Pricing review: rationalize fees on existing services like locker, checkbooks that have not been revised for years, ensuring they reflect current costs. Case study 44. The board mandated diversity target. Scenario: the board has set a target to increase the percentage of women in leadership roles, scale 4 and above, from 10% to 25% in 4 years. The current talent pipeline is weak. Challenge. Design a holistic strategy to achieve this target. Solution framework. Attraction. Mandate that every shortlist for scale 2 and 3 positions must have at least 30% female candidates. Partner with campuses with high female enrollment. Development. Create a women leadership program identifying high potential junior female employees. Provide them with mentors, sponsors, and stretch assignments. Retention. Implement robust policies, hybrid work models, mandatory maternity or paternity leave, and a clear policy against harassment. Conduct unconscious bias training for all managers involved in promotions. Accountability. Make department heads accountable for achieving diversity targets, linking a part of their variable pay to it. Case study 45, the pilot for a new business vertical. Scenario: the bank plans to launch a new sustainable finance vertical offering green loans, ESG linked loans, and sustainability advisory. You're tasked with running a pilot in your region. Challenge: outline the pilot project plan. Solution framework, scope and location. Define the pilot scope. Example: only green loans for solar installations. Select a region with high potential. Example: an industrial cluster or an agrarian state with solar pump potential. Team and partners create a dedicated cross functional team, partner with technical agencies for project appraisal, example to verify solar panel efficiency. Success metrics define clear metrics for the pilot, number of loans sanctioned, value, NPA level, and customer adoption rate. Review and scale. After 6 months, conduct a thorough review. Based on the results, create a business case for a pan India rollout detailing the required resources, training, and risk framework. Case study 46, the too big to fail dilemma. Scenario: your bank has been designated as a domestic systematically important bank DSIB by the regulator. This requires higher capital buffers which can dampen ROE. Challenge: as a senior strategist, how does the bank turn this regulatory constraint into a strategic advantage? Solution framework. Reframe the narrative. Market the DICB status as a badge of honor and stability. In all communications, emphasize that it signifies the bank's unshakable financial strength and importance to the national economy. Pricing power. Use this safety premium to justify marginally lower deposit rates in reducing cost of funds and to attract risk-averse large institutional clients. Capital efficiency. While maintaining the higher buffer, focus intensely on improving the risk weightage of assets. Example, by shifting to better rated corporates or retail loans to optimize capital usage. Strategic prudence. Use the DSIB framework to resist short-term high-risk market pressures and focus on sustainable long-term growth. Case study 47, the central bank digital currency CBDC strategy. Scenario: the Reserve Bank is launching a pilot for a digital rupee. The board wants a clear strategy on how the bank will adapt its business model to the era of CBDCs. Challenge: present a strategic outlook on the opportunities and threats of CBDC. Solution framework. Threat analysis. Acknowledge the risk of disintermediation. If customers hold deposits directly with the RBI as digital rupee, it could reduce the bank's low-cost CASA base. Opportunity analysis. Position the bank as an essential intermediary and innovator. Distribution. Be the primary distributor and an on-ramp, off-ramp for digital rupee. Smart contracts. Develop expertise in programming smart contracts for digital rupee to be used in complex trade finance and supply chain solutions. Custody and wallet services. Offer secure custody and sophisticated wallet management services for corporate treasurers holding digital rupees. Recommendation: invest in CBDC related R&D and partner with the RBI to be at the forefront of the pilot, shaping the future architecture. Case study 48, the strategic review of international operations. Scenario: a post pandemic review shows that 40% of the bank's international branches are consistently loss making, contributing less than 5% to overall profit. Challenge: lead the strategic review and make a recommendation to the board, fix, exit, or pivot. Solution framework: categorize branches. Strategic: keep branches in financial hubs, example London, Singapore, crucial for syndication and NRI services. Fixable branches with potential. Example in trade corridors that can be turned around by focusing on transaction banking and downsizing. Exit candidates branches in non-strategic locations with no clear path to profitability. Fixed strategy for fixable branches replace traditional retail banking with a focused model on trade finance, remittances, and serving corporate clients from India. Exit strategy for exit candidates recommend a orderly wind down or sale of the operation. Final recommendation propose a hub and spoke model. Strengthen hubs in key financial centers and use digital channels or partnerships to serve other regions, closing physical branches where necessary. Case study 49, the response to a big tech entry. Scenario: a global big tech company, example like Amazon or Google, has received a license to operate a consumer facing payments and lending platform in India, directly competing with banks. Challenge: formulate the bank's strategic counter move. Solution framework: collaborate and coexist. Do not try to out big tech. Instead, partner with them. Offer the bank's balance sheet and regulatory compliance backbone for their lending programs, a banking as a service model. Double down on trust. Launch a marketing campaign highlighting the bank's decades of trust, security, and its role in nation building. Attributing attributes a new tech company cannot replicate. Leverage physical network. Transform branches from transaction points into advisory hubs for complex products, home loans, wealth management, where human touch is irreplaceable. Niche leadership. Focus on segments big tech will likely ignore initially, such as customized corporate banking or complex agricultural finance. Thank you very much for your patience. Please to like, share, and subscribe to this YouTube channel.